All right. Good morning, traders. It is Saturday, February 28th. Hard to believe we are through the first 2 months of 2026. That is truly just time flies when you're having fun, right? I hope you have had a great 2026 so far. I have, in the fact that my trading account with trades that are alerted in the trendy room and SPX room at Simpler Trading. In that account, it's not up, 100% or anything like that. It's up about 40% year to date, but I'm very proud of that because I don't believe this year has been the easiest to trade. Honestly, if I'm being honest, I'm not sure that I ever think the first quarter of the year is particularly easy to trade. And in years past, they were actually usually my worst months out of the year. So this year, I've done really well. I have really, over the last 18 months, really refined how I trade supply and demand, and I'm a lot more disciplined, a lot more picky with my entries now, and my profit has shown the difference. So I'm very, very excited about that. Hey, before I get started and really dive into this week's watch list building process, will you do me a favor? Hit the like button. It takes like 2 seconds for you just to go and hit that thumbs up, but it helps me with the algorithm here on YouTube. All right, so if you are new to the channel, new to watching how I build a watch list, I want to cover exactly what I do. So for me, I am a trend following trader. I use supply and demand to find my buy and sell zones. And I want to, as far as my swing trades go, I want to focus on areas of the market that are outperforming, meaning if the market is in a bullish trend, I'm looking for the areas of the market that are also very bullish. I use a look back, I use 1 year, 3 months, 1 month, and 1 week. I note the top areas of the market looking back over the year. You can see that's going to be gold, gold miners, metals and mining, semiconductors, oil services, utilities, looking back over the year. I write those down on a scratch pad just to so that I can reference what's in the top five, and then I look back at a 3 month look back, and I write those top five down. So in this case right now, that is gold, gold miners again, oil services again, energy. Notice energy has popped up in the top five over the last 3 months, but it wasn't there on a over the last year look back. And that's because if you were trading energy in 2025, it took a butt whooping and just kept falling, falling, falling until it hit those big time frame demand zones, and it's been great trading since then. So I'm super excited actually to see energy making a comeback basically since the end of December. If you look at the price action there that I have it highlighted, it's higher highs, higher lows. It's in a bullish trend. So energy has finally gotten on the top trending, bullish trending area of the market. Metals and mining fell down some. So let me just highlight metals and mining here, and we're going to look back over the last 3 months at the price action. And it was in a super bullish trend from the beginning of December, just what's shown on this graph here, the beginning of this December through the end of January. But since the end of January, note that we are making lower highs and lower lows. Now, overall, if I were to measure this trend using Fibonacci, this would still be in the bull channel, the pullback. So metals and mining is still in a bullish trend for sure, but they're falling off as far as overall strength goes. So I need to point that out to you. And then up next, a name that was not here in the yearly look back is materials, XLB. It's just kind of had a slow grind up. It's bullish trend for sure. Looking good over at least since December, this last 3 months. All right, so that's the top 5 over the last 3 months. Then I want to look back over the last month. Look at oil and gas exploration is up here at the top. Oil services is at the top, and energy is at the top. Those 3 names being at the top, looking back over the entire trading month of February, 1 month to look back, tells me that, hey, oil was the place to be over the last month if you were trading to the upside. Then below there you have utilities, XLU. XLU tends to be when tech isn't doing well, right? The big names, the Mag 7, the things that all of us like to trade. When that part of the market isn't doing well, you will see things like utilities and consumer staples, XLP, the next one on this list. You will see them creep their way up to the top. I talked about this in some of my YouTube videos at the very beginning of 2026, that this is exactly what I was expecting to happen over the first quarter of 2026. And it has played out really to a tick. So if you were following along on the YouTube with me and watched those videos back at the beginning of January, really into December, beginning of January, I focused on really warning traders about this certain cycle that tends to happen here in the first quarter. This analysis alone kept me out of trouble, whereas in years past I might have still just been chasing those bullish moves in the Mag 7s all through January, all through February, and watching my profits go beep, 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 beep. No, not fun. I was committed to not doing that this year, and that's what we did in the trendy room. If you were following me, I was committed, and it has paid off. So notice the more defensive areas of the market in the month of February, those were your leaders. All right, let's look back over the last week. So that'd be last week. Gold miners up here at the top, utilities at the top, consumer staples at the top, healthcare making its way up here. Again, oil services, energy, you get the drift, right? It's the same things. The things that we all, strive to trade. XLK, that's tech. It's down here. Even financials took a hit. Semiconductors. One thing about financials, guys, typically where financials is going is where the overall market is going. The S&P 500, in particular, of course, the Dow, because financials is the largest part of the Dow. But if you notice that financials are on the bottom half of the strength, you can probably roll the dice and say that the market was down over the course of the last 5 days, because here's financials down here. XLK, the tech sec, it's down here at the bottom. Semiconductors, look, They are still in very much in bullish trends and showing strength across a 365-day look back. But most recently, they have shown weakness rather than strength. All right? So, until something changes, and until the areas of the market like the Mag 7s of financials and things like that start creeping their way back up to the top, I want to stay with the more defensive areas of the market as far as swing trades go. Now, I get asked all the time, well, don't you ever look for things to go short? The answer is yes, absolutely, almost every single day. Through day trading, through trading the indices, day trading. The overall market is in a bullish trend and is in a bullish trend most of the time. That's why my swing trade focus stays to the upside in overperforming areas of the market most of the time. All right. If something changes, I'm not afraid to buy a put. I looked back over my all my trades over the last 2 months, and I've made more money trading the downside than I have the upside. So I've made more money. I'm a directional trader. I buy calls, I buy puts. That's it. I've made more money on my puts than I have on my calls this year. That's through day trading from intraday zones. Supply and demand zones. All right. So all that to be said, my watch list for this week is going to stay kind of boring if you want to see the big popular names. We had a viewer here, a trader, that asked about some defense related stocks. And I just quickly did a Google search like, hey, if I'm looking for some defensive stocks, what would I look at, right? Because there's conflict right now, right? We might go to war, whatever your view on that is, politics, not going to get into it. But if we're looking at some defensive type names in the market, you're going to see things like Lockheed Martin and RTX, this is Raytheon, NOC, General Dynamics, these names that could benefit. Look at Palantir down here. These names could benefit. If you want to look at an ETF, that would be SHIELD, SHLD. That is a defensive tech focusing on AI, cybersecurity, and military tech. Those are ETFs. And of course, Kathy Wood's Space Exploration and Innovation ETF is a couple of ETFs you could look at, because honestly a lot of these names on here might be a little too pricey for a smaller account, or if your risk amount that you want to risk per trade is smaller. Some of these names are just really expensive to trade if you're buying straight up calls. All right, but those are some names that we will look at later, and just look at their charts and find some buy zones that we would be interested in trading. So that's how I narrow down my list. Then what do I do from there? Let's say that you don't know what trades in a specific sector. You want to, or I use koifin.com. When I don't know what trades in a specific sector, and I mentioned SHIELD. I had no idea what the top holdings of SHIELD was before today. So I went to etfdb.com. Right here at this looking glass, you can type in SHLD, the ETF. You hit enter, you go over here to holdings, and it's going to pull up the top names in this sector, which you can see them. If this was something that I regularly traded, I would build a flex grid using it and putting SHLD here and then putting the top names in that sector right here. But it's not something that I typically would be tracking, so I'm not going to make a list of it. But let's look at XLP. That's consumer staples. It is a area of the market that over the last month and over the last week has shown relative strength. So maybe if you don't know what trades in consumer staples, you could go to ETFDB and do a lookup of XLP. And this is how I build my flex grid. I put the top names in XLP here on my flex grid. And when I'm looking for names to add to my bullish watch list, I'm going to go through these names and look at names that are, see my indicators right here, these trendy edges. This is giving me the monthly demand, the weekly demand zones. So if price is close to these edges, I know that more than likely they're close to where I would be interested in buying a dip, and they would be good things to have on my watch list. So I'm just going to delete these names off my watch list, and we're going to build this thing together. So today's video or today's live session is a little different than other weeks where I just go through the names that I've already put on here. I wanted to give you a behind the scenes of how these names make it here. All right, and I hope you enjoy that, because that is part of learning how to build a watch list for yourself if you aren't watching my Saturday videos. All right, so we're going to take everything off except for the indices above. All right, and I'm going to start here on XLP because it has shown relative strength over the last month and the last week for some potential swing trades. So I'm going to put Walmart on here. Walmart is near a place that I would be looking to buy a dip, and we'll go and look at a daily chart soon to get the exact buy the dip area. All right. Next up would be Costco. Costco's too expensive for my account to trade. I don't trade it. It's very simple. Procter and Gamble, I'm in this thing long term, but if I look, here is the weekly area I'd be interested in buying. Here is a yearly edge, an over under. So in this area, pullback in this area could be good on Procter and Gamble. So I'll go ahead and put Procter and Gamble on my list. Just because these names are on my list doesn't mean they're necessarily going to stay there. If the risk to reward is not good, I'm not going to leave it on my list. I want my list to have the best potential setups. Philip Morris is a great one to have on my list because I got a really nice demand zone right down here. I can see it with the inside and up candlestick structure. Price is pulled back some. I'm going to put Philip Morris on my list. Look, when everything else is falling, people are still buying cigarettes, milk, toilet paper, things like that. Philip Morris benefits even when the market's pulling back. Pepsi's right up here at resistance. It would need to fall down to here, but Pepsi would be an option. I'm going to not have it on my list just because I've got a couple of other names that I really enjoy trading, which is Walmart, Procter and Gamble, and Philip Morris. All right, but I could look through all of these down here and pick my favorites. You can pick your favorites as well and just put them on your list. Now let's take a look at GDX. Now most of the time, if I want to trade gold miners, I'm going to use the actual ETF itself. I'm just going to buy GDX options. All right, and it would mean that I'm trading all of these names. Notice all of these charts look very bullish. They all look great. Well, when they all look great, it's okay just to trade the basket of stocks, okay? So GDX is usually what I trade rather than adding these individual names on here. Also, of course, GLD would be on the list. All right. Then the next thing that has been showing relative strength is oil services. We need to take a look at some oil services names that I would like on my list. This really, when it comes to oil services names, I know the ones that I really like to trade. Halliburton, I have equity still from a long-term trade that was traded in the room with traders last year, maybe 2024, definitely 2025. So for clarity, I do have equity position in Halliburton, and it's doing well. All right. Let's see. Baker Hughes, I like to trade Baker Hughes, Schlumberger, Halliburton. Those three names in particular off of this entire list are the ones that I like to focus on when it comes to oil services names. So I'm going to add Schlumberger, I'm going to add Baker Hughes, and I'm going to add Halliburton. All right. All right, so now I'm going to move down to the next area that made the list as far as strength, and that's XLE, the energy sector. XLE also, oil, think of energy. There's going to be some overlap here, like Schlumberger is in this sector, as is Baker Hughes. So I don't need to concentrate on those. They're already on my watch list. I want to use some of the other names on this watch list, like ExxonMobil or Chevron, and I do own equity on these names, FYI. So I'm happy about the run up, but if I wanted to trade them from a swing trade perspective, again, I'm focusing on these lower weekly edges here. ConocoPhillips, Williams. There's many names. I like to watch Williams. I like to trade it as well. It's one that isn't as popular as others, so I don't have to worry about duplicating somebody else's trade that you might be following, because I don't want you over allocated in a trade. I'm going to go ahead and add Williams here on my watch list for an XLE name. I already have Schlumberger, I already have Baker, Kinder Morgan here. I like trading this name as well. The buy zone is down here. I can see the inside and up candlestick structure. We'll add KMI here. Yeah. So got enough oil names represented. I am okay with this. And again, I already am in positions in ExxonMobil and Chevron, but both of those look great. And as far as areas to buy, they would be down in here where you have your candlestick structure. All right. Let's see here. After energy, another area of the market that I want to take a look at is utilities. So let's pull up the utilities grid and see what we have going on. NEE, I am very sad that yesterday or the day before I didn't go ahead and start a position on this thing because price came down into the lower weekly edge. I love trading NEE. Right where it's at right now though, not where I'm going to buy unless Monday there's weakness and we're back down to this lower weekly edge. This was one I definitely should have taken advantage of last week, or in particular on Friday when it was down at the lower weekly edge. It was on my watch list last week and I just simply missed it. I was out Friday morning. I was watching it Thursday into the close, but I had to take my husband to some medical appointments Friday morning, and so I wasn't there for the morning. I didn't come back until about 12:30 Eastern, and price had already moved quite a ways, and I just didn't get the pullback to get into NEE. So I will continue watching this name for a potential dip buy down. back down near the buy zone that I gave you last week. Southern is one that I like to trade as well. Southern would need a pullback. Duke is another one great to trade in this area of the market. So I'm going to add Southern, I'm going to add Duke, and I want to talk about ones that aren't wouldn't make my list, and we're going to start with Dominion. And I'm going to explain why. So, not all names on this particular grid are names I'd want to necessarily trade to the upside. Now, most of them, a vast majority are, okay? But you see Dominion here, how price is falling, and we're making lower lows and lower highs. That tells me, because this is a daily chart, that you've had some less favorable opinions of it or less favorable price action. And why would I pick something that is behaving like this rather than something behaving like this or like this, right? So I'm going to not have Dominion, but I will have these other big names as far as utilities go on my watch list this morning. All right. XLU we've covered consumer staples, we have covered oil, we've covered energy. Other than that, I have XLI. The industrials has been on the list, and it is showing strength over the last year, but it's kind of lost some of its luster like XME, the metals and mining, have. If I want to take a look at XLI, this is where Raytheon, I believe, yes, Raytheon's going to come into play. So Raytheon is a name that if you're looking in that defensive area, right, Mike, or anyone else, that is under the industrial sector as well. Now, overall, the sector itself, it's just really chopping here, but it's in a definite bullish uptrend. It is an area that is a good candidate to go long from. Just pick the names that look good to you here on the different windows here. You can see the UNP, so Union Pacific, Honeywell. You notice how they just look like the overall sector chart. So another thing you can do, because some of these names in industrials can be expensive to trade. So industrials is another one that we can just trade the ETF itself, XLI. All right, and that's what I'm going to put on there, but I am putting Raytheon back on there. Let's look at Boeing. Okay, it's one that is showing relative weakness compared to its brothers and sisters. I'm going to stay away from that one. But GE, CAT, Raytheon, Union Pacific, GE Verona, Honeywell. I'm staying away from Uber unless I was wanting to trade this thing long-term swing trade. Long-term meaning 6 to 12 months. I'll buy a big old red chart if it's come down into quarterly demand, you bet. And Uber, I believe, will be around for a long, long time. So let's go for it. Lockheed Martin, LMT right here. Remember, that was another name that was in the defensive area that could be of interest, but I can tell you right now, it's too expensive for me to trade. So, that being said, Mike Boland, RTX and LMT, two names that are in that list of potential beneficiaries of a conflict. So XLI might be a way to profit off of that. All right. What do you mean Uber seems mislabeled to you? We can look at it on just a regular chart, UBER. Let's look. And that was a daily chart. This is what Uber's daily chart looks like. Pam, you see it? It's not mislabeled. It's just not looking the best in the world. But it did come down near the lower yearly edge. It found a bounce here at demand right here. But yeah, it's not mislabeled. Oh, as an industrial. Well, let's take a look. Maybe I messed that up. So let's take a look, right? This is a good exercise to do together. ETFDB, industrials, XLI, we're going to look right here. And we're going to go to holdings, and we're looking for Uber. See it? It's part of the industrial sector there. So Uber is considered part of the industrials. All right, now let me go back to the flex grid, and what I did for industrials, I just added the ETF, but I do want to watch Raytheon. All right, anything else on here that you really like, you could add it to your watch list. GE is a great one. It's just gotten too expensive for me to trade with straight up calls at the money right now, so I'm just going to bypass that. But I like almost everything in this name. Boeing's pulling back for sure. Uber is red, but it is finding footing, making higher highs and higher lows, and everything else looks good to go. So XLI is on my list, and Raytheon from the industrials. So I have covered all of the sectors that I really want to focus on, unless there are specific names in the metals and mining that just look really good. I will add those to my chart. I'm not going to trade this chart itself, but do we have some outperformers like CDE here? CDE, you see how that thing is just bullish as heck. So a pullback to demand would be a buy for CDE. So I'm going to add CDE to the list, looking for the things that look better than the others. Alcoa looks good here. I'll add Alcoa back to my list. And then Royal Gold looks great. It's just too expensive for me to trade. Freeport looks good with a pullback. I would need to see a pullback, so I'll add Freeport. I've got gold miners on there. No need, no need, no need, and no need. All right, so that gives me XME. Then the other areas of the market that I'm constantly every week looking at is the social sentiment area. Buzz, BUZZ, is the ETF, and these names change a lot. So you really need to use ETFDB once a week to get an idea what areas or what names are on the social sentiment radar from week to week. All right, so this is current. I looked it up last night or this morning. PayPal's on here. This thing, it's in a bearish trend as far as a daily chart. If I wanted to trade PayPal, I would do it from longer term than what I'm really looking to have this watch list consist of. MSTR is a no-go for me unless I was looking to go short it. SMCI, that's a definite candidate here for a pullback near this imbalance candle. near this weekly edge, near this yearly edge, all in that area there. That would be a candidate. So I will add SMCI and just take a look at that chart. Other than that, MU looks great, but we have a lot of traders trading it in the rooms at Simpler that I don't want to jump on the same trade as everyone else. Netflix, if anyone was in those leaps with me that expired in June of this year, made some money there. Netflix, again, this would be a longer term trade, so not something I'm going to put on this watch list, which these names I'm looking to be in for a week to a month, basically. Netflix isn't one of those. I would have to choose further dated unless it were for a put position on the short term, a pullback from this nice big huge rally that it's had for 1, 2, 3, 4 days. All right. MU, again, I've already talked about that one. GameStop, I don't really mess with that. Nvidia has lost its structure. It is coming down to the daily 200 though. This is a name that if the market sees at least a relief bounce into the beginning of this coming up week, Nvidia could be one of those names that bounce back up near 190 before it comes back into a resistance area that it's been fighting for months. Yeah, so that's what I see on the buzz sector. The other sector I like to always take a look at, and this one also changes, is the IBD 50. These are smaller names, but they are names and area of the market that is an outperformer. So any of these names that you like to trade, this is more current. You see CDE on here. There's an overlap there with the metals and mining. Fix, this one is so expensive I can't trade it, but it's a good looking chart down here if price pulls back down here. STRL, not familiar. I can tell by the price of it though, it's going to be expensive for me to trade. I'm looking for names that are familiar to me on this particular chart. FN, again, more expensive, but always take a look at FFTY just to see if there's anything in here that looks good to trade to you. I would, if cost wasn't a issue, STRL. If there's liquidity, sometimes these names can have not so good liquidity, but we'll take a look. Boy, I knew it was going to be expensive. Yeah, the liquidity isn't great. Maybe for equity, but no. Nope. All right, that's covered that. The defensive names that Mike wanted to take a look at. Let's start there since you requested that, Mike. Oh, I wanted to look and see SHLD. Can we just trade the ETF, right? If we're going off of a more macroeconomic idea, I would still always depend more on, like I'm buying a dip, but I'm buying a dip at demand, right? So I need a pullback slightly, not much, but this is what the pullback would look like if this SHLD is tradable. This what the pullback would look like. That's lining up really nice with that lower weekly and lower monthly edge. As far as resistance goes, this would be the first area to trim. Not a lot of movement, room to move to the upside, but here is the target. Okay. So I got a first trim or a first target somewhere around 75, and then a higher target up near 77.5 by 78.5 for this particular ETF, Shield. All right. Now, that gives me a risk of just less than $2. The initial reward is about 2. It's a little less than that, but the ultimate target here is better than that. But none of that matters if I don't have liquidity on this name. And there is liquidity. So I can go out March 20th. I can go in the money and hunt that liquidity. So SHLD, Mike, and anyone else interested, if you have a smaller account, that is a viable way to trade this name. You can even probably go out, well, April, you don't have as much liquidity. So that would be a March 20th expiration. And I would hunt the liquidity. So my preference is to go in the money. And that would be here around the 72 mark, right? Or if you like to trade out of the money, I would go 77 or 80. All right? And that's what I'm seeing there. And that makes sense to me because 72 is going to bring us to the demand zone. If you want to scale into this thing, see that gap fill right there? That's lined up with your daily 50. So going long at the beginning or the top half of this zone, adding to full allocation at the bottom half, and set a stop near 71.32. All right. Now let's go through the list and just focused on daily charts. I want to give you the buy and the sell zones for these daily charts really quickly here. All right. The buy zone for Alcoa is 59.84 to 57.26. The sell zone for Alcoa 64.15 to 66.95. Baker Hughes, we probably have to do this one together because this is no, it's not old. Okay. All right. Baker Hughes is definitely in supply up here. Not exactly where I would be looking to go short. I said I was going to bring that over. Let me go to a higher time frame and just find where that supply is coming from. Obviously, Baker Hughes is at the high of the last 3 years, but it is not at the high of its lifetime. It is topping out, or it is right at this top right here. Okay, so basically your weekly supply zone is going to be right in here at 66 to 68 and a half. You see the inside and down structure. That's where the target would be. All right, now keep in mind, on the daily, you have some structure right where price is at. But I'm going to change that target zone to 66.10 by 68.59, looking at that daily chart. So it is 66.10 to 68.59. Okay. All right. Remove. Okay. Now, let's look at where we have possible support here or a buy zone here below where price is currently at. Your lower weekly edge, you could trade this as a quick zone here. Now, it is not inside and then up right here, but it's very close, and if I went back to a 4 hour, it probably is. If you have the trendy indicators, you don't have to do all of this. You can just use those lower weekly or monthly edges as your buy zone and draw down, turn the cloud on these zones, and it's going to give you it as a zone. All right. So for a quick buy zone on Baker Hughes, that's going to be 62.71 to 61.60, and the target is going to be that 66.10 to 68.59. All right. CDE is a name that showed up on the IBD 50. It also showed up on metals and mining, and very possibly gold, GDX. I'm not sure. I can see right away where my buy zone is, and hopefully you can too. If you've been following the YouTube for any length of time, you should be able to see pretty clearly the buy zone here on CDE. Can y'all see it? Let me know in the chat that, hey, yes, yay, I saw it. It's pretty obvious, right? This is it right here. And the reason why I'm saying it's obvious is because this is a nice big imbalance candle right there. The move out after we consolidated and made an inside candle is great. All right, so it's what I mean by great is when you're looking for where buyers are potentially positioned or buy orders are setting that haven't been filled, you want to look for those candles either up or down that are larger than others. Those are what we call imbalance candles. Imbalance candle. All right, imbalance candle. So that's why right here at around 27 and a half, that, my friends, is got to be part of a target for you because you got a big imbalance there. But I'm going to go a little bit closer right there at 26.43 because I have an upper monthly and an upper weekly edge. So this is a buy zone. This would be a trim, and a target above. All right. That is CDE. Let's look at Duke on the daily. Now, I have not charted Duke in a while, so we're going to clear this drawing set, and I have no idea if that's Duke's all-time high, so I need to go over here to the weekly and just see if indeed that's Duke's all-time high, and it is. Okay, so Duke Energy made an all-time high yesterday. Very nice. Duke Energy on a pullback is a buy the dip opportunity. The pullback is going to be right here where you have a couple mini inside candles, and then you start that move, that trek to the upside. If you look, I'm positioning the top of my zone at these trendy edges right here. So Duke would need a pullback for me because I don't buy highs to go long. So Duke would need a pullback to 127.28 by 124.78. That would be my buy zone for Duke on a swing trade for next week. And as far as targets go, that first target, I am using that upper monthly, upper weekly, and all-time high. Now, what do we do to find targets above the all-time high, you might ask? Very simply, if I'm intending to be in this trade for about a month, I want to know what the monthly ATR is, and it's about $8. All right, so that's going to give me an idea that if price pulls back to here and the monthly ATR, right, I'm buying down here, and the monthly ATR is about $8, I can expect to move up to about 135. I can measure from this demand zone up to the current high. And I bet you that's going to be at or around this bearish GP. This 38.2. All right. That is going to be the extension target. Then I can use the 618. I can use the 100. Extension targets are just that. They're extension targets. I don't put so much weight on them because there's no candlestick structure up here that they're based on. This is not supply. This is just simply using this move at the monthly ATR are right around the 38.2 extension, and then the 100% of this move to get us at a further target up there. All right, so that's the targets on Duke. Let's look at Freeport. Freeport has been in a daily squeeze. It looks like yesterday it fired, which seems odd to me, but maybe. I'm not quite sure about that. You see the green dot here on the ultra squeeze. It's showing it as fired, but I'm not seeing that. Maybe we just got a bust up move next week and that squeeze continues to fire to the upside. Freeport's buy zone was down here. Yeah, I'm going to remove Freeport just because it's not near a buy zone, and if this squeeze has fired, price is going that way, and to me there's too much resistance right where it's at, so I'm not going to buy it here. If you still want to place Freeport, then you could possibly look at buying a dip down here at the lower weekly edge, 64.5, and I would set a pretty tight stop unless, of course, you're okay with setting through a pullback all the way back to this demand zone that price buy orders down, buy orders filled, down, buy orders filled, down, buy orders filled. Is there more buy orders? I don't know, but this zone has been tested multiple times. All right, so now I'm removing Freeport from my list, but this is a potential buy zone. I would still trim at 67.30 to 69.63. Okay. All right. After Freeport is gold, GDX, gold miners. Let's go ahead and clear this drawing set here and just look at this extremely bullish move with no pullback, really. I mean, does this candle close lower than it opened? Yes, but it is still closed above the previous candle. So basically every day for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 8 to 10 days, this thing has been gone. All right, here is the consolidation area, and here is the move out of that consolidation area. That would give me a buy zone of 104.33 to 97.41. The upper weekly edge is above here. If you wanted to start a position, if you don't believe that gold miners would pull back here, and you think they stop here at about 107.5, that's fine. You can buy a pullback or at least start a position there. As far as targets go on GDX, I'm using this upper monthly, upper weekly edge, and the all-time high as targets. And again, if I were to buy out to March 20th on this GDX play, I would want to know what the monthly ATR is. It's about $10. If I'm buying down here, this is going to give me all the targets I need. If I'm buying right here, obviously 117 would be a target, but you got a couple of targets, and if we get in this trade in the room and we need more targets, I will provide them in the room. All right? So that's GDX. Gold has been something that I've been focusing on, just trading for day trades. All right? And gold, I gave you this zone to buy the dip last week, and you can see that it was a good place to buy a dip at. All right? The targets remain the same for a gold swing, and that's 489, 499, and 509. About every $10, right? I'm day trading gold, and that's my focus right now. So, but if you want the swing trade, it was this zone is what I would use as the buy zone, and these would be my targets for a swing trade. All right, Halliburton. All right, I'm going to remove that line there. I can see my first target's going to be right there at the upper monthly, upper weekly, then $37.01, and finally $39. Those are some upside targets. As far as demand goes, it never pulled back to last week's lower weekly edge where I would have been a buyer. It did create some demand here at the lower weekly edge right here. As far as where I would set my stop, if I was using this very tight zone on Halliburton, it would be right here. Otherwise, I would wait for that nice green buy zone down below. So a potential buy zone on Halliburton using the lower weekly edge is going to be 34.80 by 34.19. And then I'm looking to trim at 35.80. That's a dollar reward, and the risk is about 60 cents. Then 37.01, and then $39. All right. KMI, this is Kinder Morgan. Wow, what a move. Blew through that supply that it was stuck at forever. This is what I mean whenever I was talking, it was a demand zone before, but I was saying when a zone is tested so many times, I just want to show you the power and what I'm talking about. So here we created supply. And this is where we believe institutions or bigger money has sell orders, blocks of sell orders waiting to sell. And when something gets sold, price goes down. When something gets bought, price goes up. Okay? That's the basics. So when price came up here and tested the sell zone, some more sell orders were hit and price pulled back. Then it came up here and it tested it again. Obviously, there were still sell orders there and price pulled back. Then it came up here again and tested again. Obviously, still sell orders there and price pulled back. Then it came up here and tested again. And if you were one of the traders that was like, hey, here's a supply zone. Melissa said there's a supply zone there. I'm going to go all in to the downside. And Melissa said, hey, this has been tested 1, 2, 3 times already, guys. Not sure that there's still sell orders here. Trade this with caution. You would have taken a loss because price action is king. Price action told me that, guess what? There weren't sell orders still here. Big money, institutions weren't still waiting to offload right here. They did it on all of these tests. That's why it's not so easy. It's not so simple that we just draw a buy zone, a sell zone, or a demand zone and a supply zone and think that it's going to work forever. That's not how the market works. Okay? Anyway, that was a long explanation about that, but it was a good way to point it out, and I hope it helped you understand what we mean by sell orders and the importance. Not every zone is the same. Fresh zones are better than tested zones. All right, so let's take a look now at Kinder Morgan. You notice the move up, it's right here. You notice here is inside candles, and then you start the move up. I would go underneath this larger candle and this one. This is the bottom. Ooh, I almost missed that. This is the bottom zone here, guys. Now, we have made demand higher up since this zone right here. But I want this zone on here since I erased all of the zones before, and especially down there, right? So then we continue moving up. Then we get some consolidation with some inside candle. This is where your lower weekly edge is, and this is the zone that it's related to. Okay? Now, please note, remember I just talked about fresh and not fresh zones. Okay? Let me ask you in the chat, this is where you get to play along. Is this a fresh or tested zone? And I'm going to wait patiently for some answers. Is this demand zone fresh or tested? All right. Jay says no, it's not fresh. And Jay is correct. This is not a fresh zone. Deepak says it's tested. Mary Jane says tested. Mike B tested. All of you are correct. Test, test, test. So, it's a tested zone. It could work again. You got to be okay with this risk. You can use my confirmation process. If you don't know what that is, take my class. I taught it. Or sign up for the webinar on March 11th that Trendy John and I will be doing. I'm going to put the link for you to sign up for that webinar where we're going to talk all about supply and demand 2026, the evolution of trading it. And in the class, part of what that evolution is looking for confirmations in these buy zones or sell zones. Okay? So, anyway, here is the first buy zone. Here's the second buy zone. As far as areas or targets, sell zones, what I'm going to do is again go to this higher time frame chart because it's been a while since Kinder Morgan was up here. Okay? All right. Here we go. Boop, boop, dee doop. I've got that top there marked. Okay, here we are. Oh, wow. I wonder why it topped there. Do you see the supply, guys? You see it? You see it? That's why it topped there. All right? Supply. It doesn't matter that this was a long time ago. When I say a long time ago, do you want to know how long ago? 11 years ago, guys. 11 years ago that this supply was created. And 11 years later, price comes back to it and it stalls. Crazy, right? But that's how supply and demand works. So the top of this zone is going to be right here. This is going to be some resistance, right? Obviously, 33.35 to 34.81. I'm going to go back to 33.35, 34.81. Those are going to be some targets to the upside, 34.81. We don't got to be exact. We're just going to put it up there near 34.81. You know, the market doesn't reward you for being exact, FYI. You don't get a medal for being exact. You gotta treat the market as these lines are drawn with a broad tip marker, not a fine point pen. Sorry. All right. There's the buy zone. There are targets, and here is the lower buy zone on Kinder Morgan. Now let's look at NextEra Energy, and let's all say, Melissa, why didn't you buy that dip? Well, guys, because I wasn't around. And did I put in a blind bid? No, I did not, because I would have been waiting for confirmation. Okay? All right. That's what we got. These are targets. It remains the same. This is a buy zone for me. Here's target. Here's target. All right, on NEE. Let's look at Procter & Gamble. Again, we are in an equity position on Procter & Gamble in the trendy trading room here at Simpler. So this would be something not related to that position. Let me remove. Let me do this on a daily drawing set real quick so that, oh, there's my investment 2026 drawing. But we're going to save this as a daily. I like to have different drawing sets for different time frames trades, right? This one is one that I'd want to be in for a week to 4 weeks. So here is my buy zone on this daily chart. Then as far as targets go, I've got a couple double stack of trendy edges up there, the monthly and the weekly edge. That's going to be a trim here right there. All right, that's going to be a trim, and obviously this upper yearly edge is definitely a target up there. But let's look for that inside and down candlestick structure that I base my buy and sell zones off of, right? Oh boy, I see it. Hopefully this will come into play. Yeah, it does. All right, up in here, obviously this isn't looking back far enough in just 1 year. So let's go a few more years back. All right, and here is where we topped out yesterday. So I want to go over and above that area. Okay, inside, down. So in this area right here is where price is stalling at right now. So that's going to be the top of that zone. See the inside and down? I'm not going to draw this as a big old red zone because price has already tested it and price is there right now. This is my next target. I have to look up and to the left to find that next target. And what I'm going to do is I'm going to show you, this is an initial candle. This is inside, 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 down. Notice that. That's going to go along with that. So my actual big old sell zone on Procter & Gamble is going to be right here. Okay? Now, this is the sell zone is here at 170, 169.95. So you got to know that when price gets up to here, we're actually in that sell zone. I'll go ahead and bring it down to 169.95 because I don't want, if you get there, you to forget that that is supply. All right, so I'm going to bring it down. Then I'm going to look at where that first target is, and I'm going to line it up with upper monthly, upper weekly, and that's going to probably right where I have it. Looks like, yes. Okay. All right, so here would be the plan. I want to be a buyer down here near 160.5 by 155.77. 165.47 is going to be a target, and then this is supply. That means that's my ultimate target to the upside on PG. Now let's look at Philip Morris. Boy, it is stuck in a tight range, my friends. Whew. Holy mackerel. That's a tight range. Here's your buy zone. Here's your sell zone. That's where it's at. Be a dip buyer. I would buy the dip down here, and I would cover up here. You can leave a runner on in the event that we break out above this zone, but I would have a majority of my profits off in this supply zone right here. So you got about $3.50 of risk here and about $3.75 reward. So if you want to play this zone, you want to be a buyer down here and a seller up here. You can leave a runner. I would just be pulling my stops up as it makes higher highs in supply. All right. RTX, let's look at that old daily chart. There it is. Boom. Beautiful. Yep. That's still the play on RTX. A buyer, trim, target. Okay. Shield, the ETF. Remember, we already went over this. Buyer, trimming, target. Schlumberger. See what has changed with good old Schlumberger. An early buy, you could early, it really isn't early if you're just trading the trendy edges and that lower weekly edge. That's going to give you a buy zone here at 50.33 by 49.25, and then you're wanting to cover at 51.82 to 52.40. Price above 52.40, I'm looking to trim right about 53.94, and then I'm targeting 55 by 61 on Schlumberger. All right, I still like this name. I'm still a dip buyer. If this zone breaks, and I might use 48.67 as my stop, I would stop out of the trade and wait for this as a separate, different trade. All right, SMCI, super micro computer. On the daily, this thing is in a downtrend. It's yikes. It looks kind of like what Netflix looks like, in that price came and just camped at this lower yearly edge for what looks like forever. It isn't forever. It's since the middle of December. This, folks, is the buy zone. All right. I'm going to use the lower weekly edge, and sometimes you can just see it, right? And then I'm going to use the bottom, the low here, and that's going to represent the buy zone for SMCI. Now, is this thing in a bullish trend looking at a yearly chart? No, it's not. It's in a bearish trend, okay? So any bounce that I play, I have to respect the trend that it's in and play a relief bounce if I choose to play SMCI. So what's a relief bounce look like? $35, 39.5. All right, those are my targets there for SMCI. That's how I'd play SMCI for a potential bounce. Oh, I can't neglect the upper weekly and upper monthly. So you got a risk of about $3 there. You got a reward of about 3 to 4. And then obviously up here, it's much better. So that's how I would play SMCI. Let's look at Southern. Boy, okay, it's right at supply, that's for sure. Inside, down. You also got an inside down there. Yeah, I'm just going to draw this supply zone, this entire area with that big old topping wick. I want to capture that psychological value of 100 for sure. Psychological numbers, those big round numbers, I made a video about that. You can check it out, but they're a real thing, at least for an initial bounce or rejection. So keep that in mind for the Southern. As far as inside and up candlestick structure, right here, and that you have the lower weekly edge. Notice this move is just a trickle. This is not a powerful zone. There is no imbalance move out of this thing. It is just a trickle up. And if I were playing that zone, I would know that and trade it as such. As far as a zone below there, if I'm just looking at this daily chart, I mean, I gotta go with what I would do. I would be lazy and not try to investigate where this zone necessarily is based on this lower monthly edge. I would just come down here. I would use the yearly edge mid, and then I would look at this lower ME and look at where we consolidated right here, and I would use this as a zone using the yearly edge mid and having my lower monthly edge for March in that zone. All right, so that is what that looks like. By the way, I put a Q&A poll in the chat. Hopefully you can see it up above. It says Q&A. How is your trading going so far in 2026? What's your biggest struggle? If you would, at the end of the video, I'd like to answer some questions or go over some answers in that Q&A. All right? Don't forget to hit the like button if you haven't done that already. I surely appreciate it. So here's where I want to be a buyer. This is where I want to be a seller. If this zone breaks because it's a little trickle out, hey, no harm, no foul. This is a buy zone below. This zone is not fresh because inside up, and we came back and tested it. All right. All right. WMB, this is Williams. Way long time ago, my husband worked for this company out of Tulsa, Oklahoma, as a matter of fact. Not related to oil, but IT. All right, Williams on the daily. You see the consolidation, the inside candles here, and then the gap that we got to the upside right there. There's a buy zone. You also have a buy zone further up that has been tested on Williams, and I will show you that one as well. That's probably going to line up with or at or near our weekly edge here. So you have inside candles, inside candles, inside candles up, inside up. All right, that's how I found that zone. It's quite impressive, but it has been tested, obviously, and it's a little trickle up. I'm going to leave it gray for me. Then, as far as I want to see, are we indeed at an all-time high? And we are, okay, on Williams, right here. So that's all-time high. As far as if I want to be in this trade to March 20th, let's say, I need to know that this thing moves about $6 a month. So if I'm getting long here and I want to trade some upside targets, I'm just going to use this move from 65 to 75, couple there. And I'm going to go right here in between the 236 and 38.2, then the 618 and the 100. Okay, those are some upside targets on Williams. All right, Walmart, also a trade that we are currently in, or I am currently in, from a long-term equity type trade that was shared with the trendy room at Simpler last year, maybe the year before, maybe both. All right, but just for transparency purposes, we are long equity on this from 80 something dollars. All right, Walmart is that defensive area of the market when the tech isn't doing great. It tends to do well because people, even if there's uncertainty in the macro area of the world, right, the politics or what have you, war, whatever, people are still going to Walmart to buy necessities. That's why it tends to do well. Here's a buy zone just based on lower trendy edges, all right? As far as trims or targets, this is what I would use to the upside. All right, so I want to be a buyer here or all the way down here. All right, I'm not really interested going long right here because we're at resistance. So I would need a pullback, trim, trim. Okay, that's Walmart. And then let's just look at the industrial sector for those of us with a smaller account that want to trade some of those pretty expensive names. This is how I would create that zone. I'm going to come up here to that lower weekly edge. I really like using those edges for ETFs and indexes. It's just, they work really well. All right, that's my buy zone on the industrials. Now, if I'm already long Raytheon, I'm probably not jumping in long industrials, okay? Just so you know, because Raytheon is a top holding of the industrial sector. All right, and there's some targets to the upside. So I want to be a buyer here. Here's the targets to the upside. All right, now I'm going to go to the Q&A and see if any of us figured out how to answer that question. I don't see your answers. Has anyone answered it? Can you see the Q&A? Or do I just not know how to use it? Let me know. I can't see answers there, so I might have to figure that out and use it another time. Mary Jane says, is today's lesson recorded to review? Also, thank you so much for being here. You're an exceptional teacher, and blessings to you and your husband. Aw, thanks, Mary Jane. Yeah, it's recorded. It'll be available forever on my YouTube. I will get you a link. I know you're in the trading rooms. I'll get you a link to watch the recording, or just go to my YouTube and you will see it under live sessions, okay, with today's date. Couldn't find the Q&A. Okay, that tells me that I don't really know how to use that feature yet, so that makes a lot of sense. So I'll ask you here in chat if how's your trading going in 2026, and is there anything that you're really struggling with that you would like me to cover over the next couple of minutes here? All right, so let me know. All right, Mary Jane, thanks for being the first one to answer how your trading is going and anything you're struggling with. And Mary Jane's answer is she's not trading because she's not confident enough. Mary Jane, if I could suggest one thing that you could be doing is consider trading in a paper account. Right? Open you up a paper account. It's not your actual money. So there is a difference, I'm not going to lie, about trading a paper account compared to trading your real money. Definitely different emotions around wins and losses. But it would give you practice of taking trades and building that confidence. Let's see. Nim Mom says, not well. Need help with deciphering trend on SPX at the open. Well, let's look at that, okay? Let's look at SPX. I actually didn't go over. I love trading SPX, and I day trade it every day. So let's talk about SPX from a top-down approach and how I approach every single day. First off, we're in chop. We have been in chop. it is chop, 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 chop. This is when I like to definitely keep my focus more on day trading than swing trading. And my account is evident of that this year. Day trading every day. Swing trading, very picky. All right, that's what we got on the weekly chart for the S&P 500 cash. Then let's look at the daily chart. It's going to show you the exact same thing, that we are chopping between 6,800 and 6,950 by 7,000. That is the chop range. Very simply, okay, Eminem Mom, if you are looking to be a buyer and you wake up on any day, intraday, right, for day trading, and we're down near 6,800, that's when you know you want to focus on being a buyer rather than a seller. And if we're up near 69 and a half by 7,000, that's where you want to look to be a seller rather than a buyer. Okay, now that's big time frame. We're in the middle of that right now. All right, 4-hour charts really gonna look exactly the same. Let's talk then about a daily chart. All right, or a day trading chart. I'm sorry. I like to use the 2-hour. I have the top of this chop, I have the bottom of this chop, and then in between here is the middle. All right, so you said you need help figuring out the trend on an intraday chart, okay, or at the open. So if I am looking, obviously we have no price action pre-market on SPX, right? So if I were looking at this chart, and let's just pretend that it's Monday morning and the market's getting ready to open. The most recent trend, what would you guys say the most recent trend is? Bullish or bearish? Looking at these 2-hour candles. The easiest way to tell, all right, is lower highs and lower lows. The most recent trend is to the downside. All right? Don't marry the idea that it's going to remain to the downside. If we start making higher lows and higher highs, then you have broken that trend. Where I really consider the trend broken is if I am measuring here right before the market opens Monday morning, I'm measuring this trend, and I will typically have a line on the chart that is gold. Sometimes it's even part of a zone, right? This trend is broken if the bulls can get price above this golden Fibonacci level by making higher lows and higher highs. All right, so on the open, if price shoots up here above 6,900 and on pullbacks it becomes support, even if I have assessed the trend to be down, right, I'm going to change my assessment, because intraday charts, your trend can change throughout the day, and we must remain flexible and be willing to swap our charts up some. So on the open, in this particular instance, I would say the trend is down, right, bearish. But above 6,900 and using 6,900 as support, it would change, and I would run my fibs this way. Okay? But regardless, if you're just talking about day trading, yes, the overall high time frame trend is bearish or bullish, sorry. And the weekly chart is definitely bullish, and the daily chart is still bullish, but maybe the 4 hour chart is showing more bearish, and the 2 hour is showing bearish, and the 5 minute is showing bearish. You can trade it as a bearish trend for intraday trading until that changes. The most important part is to be able to look at, know what amount of time you intend to be in a trade. If it's a scalp trade like for me, and I'm scalping 5 to 10 SPX points, the fact that from a weekly chart we're in a bullish trend, yeah, I take it in consideration. But right now on a 2 hour chart we're in a bearish trend. That means I'm willing to be a seller or buy puts in a sell zone. I'm also willing to be a buyer and buy calls in a buy zone if the risk to reward is worth it. So if the trend is bullish or bearish is important, but what is more important is finding where you want to be a buyer, finding where you want to be a seller, then using some sort of confirmation that when price gets to your buy zone or sell zone, that the market is actually selling off from a sell zone, right? You got a change in character because you would see up candles if price made it up to here. Then you get some sort of confirmation that the momentum is shifting to the downside, and that's when I take the trade, and vice versa here. So the trend is your friend. If there's a lot of ways to determine the trend, but the most important part is to know where you want to be a buyer, know where you want to be a seller, and get out of your own way and trade from a buy zone and a sell zone and be willing to do both. The Friday gap down caused you grief. So I'll show you how I measured the Friday gap down with Fibonacci. I just went from where Friday closed, all right, to, well, let me get this on without my drawings. All right, I just went from where we closed on Thursday to the gap down, and I ran fibs there. And this bearish golden profit area between this 50 and 618 provided me a sell zone all day where I made money to the downside. And then a buy zone was down here near 68.55 and it provided opportunities to trade the upside. So if you can learn to be flexible and know where you want to be a buyer and know where you want to be a seller and trade both sides if you're an intraday scalp trader, I think you will find that a lot of the other things just take a back seat to it. All right. Let's see. Bill says, when I take my time to study the charts before entering a trade instead of FOMO, I'm successful. Oh, Bill, so true. That fear of missing out is a beast to overcome. But again, using alerts on your charts, having hey, just being a stick in the mud that says, guess what? If price don't make it to my zones, I'm not trading it. And it's okay. There's no trader out there that's going to catch every trade. I wouldn't even want to. The stress would be way too much. All right? Keep that in mind. I hear you, and it's a battle for everyone. Awesome. Mary Jane's going to try that paper trading. Mike says, I need to switch brokers. Tired of the horrible fills and orders never getting filled. Just getting back into day trading SPX with some mixed results. Slowly improving, getting better charting. Great, might be. Yeah, like Mike, you've been around. Very, very, very loyal, trendy trader. And I know that you know all about, creating zones. And I have confidence that if you can master the psychology of it, you can master what's up here, Mike, and stay hyper focused and disciplined and journaling and all of those things. I know because you've done it before, you've turned it around, and you can do it again. So I believe in you, my friend. Leslie says, struggling with scalping and day trading, more of a swing trader struggling with quick executions on day trades. So looking to build my confidence when pulling the trigger. Leslie, when we say that we struggle with quick executions for day trading, you nailed it there, Leslie. It's not necessarily that we struggle hitting the button quick enough. We struggle with the confidence to hit the button quick enough, because this mouse is easy. Boop, boop, click, right? You nailed it, Leslie. So way to go there, because knowing what is causing you to be slow in executing is half the battle. So I would say this, Leslie, if you're you're more of a swing trader, but you can still swing trade this market. I've been swing trading very small, not a lot of position swing trading, but I've still had positive swing trades this year. I've had some losers too, but overall definitely more positive swing trades than losing swing trades. But it is a day trading market right now because we are stuck between zones. With that being said, if you're trying to get better at your day trading, I would suggest, give me 1 second, I'm about ready to sneeze. All right, sorry. I would suggest trading a little bit smaller size until you can push that button quickly and with confidence. All right, trading a little bit smaller size until you build that confidence. I think that will help. Bill, I got lots of videos on setting up the drawing sets. I'm not sure, Bill, if you're in the trendy room. If you are, we have a notes section called educational videos. So let me know, Bill, if you're in the trendy room or not, because if you are, you have access to that. DMC, you're not a day trader either. Hey, you know what? Then in this market, focus on, just the really good looking swing trade setups. You need to be really picky, or make your focus longer ideas for swing trades and scaling into positions in case we keep dipping. All right, Bill, you are in the trendy room at Simpler. So in the notes section in the room, Bill, under educational videos, scroll down towards the bottom, and there's a video about starting a chart from the ground up. And I believe that's the video where it talks about drawing sets. All right? Mike, I'm here for you always. every day in the rooms, all of you, just know Trendy John and I, our passion is in teaching. Our passion is not in feeding you alerts, although you do get good alerts. But that's not our passion. Our passion is teaching you how to fish and how to find supply and demand zones and how to become an excellent supply and demand trader. So, again, I'm going to mention the webinar that's March 11th. Trendy John and I are doing at Simpler. I'll put a link to the webinar in the description below. Make sure you sign up to that. All right. We are going to talk about what has evolutionized in our trading of supply and demand in 2026 and how during a very difficult time in the market, Trendy John and I's accounts are both green. We are in profits for the year. That's something because not everyone is there and it's been pretty hard market to trade. So make sure you sign up for our webinar. Make sure you like the video here. Make sure you're subscribed to my channel. I put out videos, at least 1 or 2 videos a week. I do shorts that you can watch really quick, less than a minute. And of course, live session every Saturday right here at the same time, 7 o'clock Central, 8 o'clock Eastern. I appreciate every single one of you, and I look forward to seeing you in the rooms at Simpler Trading or in my next video. Have a great weekend.